Hi, everybody. Thank you so much for joining me. Before we get started, please hit subscribe to follow all of my latest investing and personal finance content. And be sure to check the link on your screen for a special message from our sponsor, The Motley Fool, where you can find the 10 best stocks to buy now.
And so, one REIT that I'm really not worried about is in the self storage space, and its public storage ticker symbol is PSA. They're not my favorite self storage stock. If I were to name a self storage stock that I thought had the chance to, double or triple over the next 5 or 6 years, it would probably be like a Life Storage or an Extra Space Storage. But Public Storage is my portfolio because it's a great, well run business, and it's a company that I don't worry about at all. There's a few reasons for that. One, the cost structure of their properties are fantastic. They have their scale advantages over competitors. Um, most storage facilities have low construction costs compared to other types of properties. Public storage estimates they can break even with 30% occupancy. They're currently over 90. That's a pretty big margin of safety before it would become an unprofitable business. They have a fantastic balance sheet that is just unparalleled in the self storage industry and in most of the REIT industry. They're a $50 billion market cap company with less than 7 billion of debt. Up until about 2016, 2017, they had zero debt. They were pretty notorious for that, and started just taking advantage of the very low rates that were available at the time. So their debt is very low interest rate. It's pretty new. They're one of the few REITs with A-level credit ratings from the ratings bureaus. So if they had to borrow money, which they're not, they don't have to borrow anything. They could do so pretty cheaply. And if you look at their track record, I know Tyler loves to study companies that have returned like 100-bagger returns and things like that over the past. Public Storage is one of them. In the past 30 years, they've been public for over 40 years, but in the past 30 years alone, they've been more than a 100x company. And it's because of their very disciplined capital allocation and just great management. And now they are the undisputed leader in the space. They're bigger than the next two or three companies combined. So it's one that I don't worry about.
Yeah, one of the things that I find is one of the true tail signs of a great management team is in REITs especially is an intense focus on per share value versus just growing for growth's sake. And one of the definite clear signs of somebody that is just growing for growth's sake is massive dilution by share of shares outstanding. And if you look over the past, since 2011, or sorry, 2010, they've gone from 175 or 170 million shares outstanding, 175, less than 5%, like 2% or 3%. That's very small over a 10-year period, especially actually 13 years, especially in the REIT space. And so you see things like that, and that to me, with a very good debt load, to me says this management team actually cares about per share growth. And if there's any lesson from anybody, that's the thing that matters in REITs.
Yeah, they've generally funded growth through just excess cash flow, not necessarily by borrowing. And when you don't have to pay a ton of interest on debt, it's a lot easier to have more excess cash flow that you don't have to pay out as dividends.
Yeah.
The common REIT myth is that REITs pay out all of their cash flow or substantially all of it as dividends. They have to pay out 90% of their taxable income, which thanks to the accounting rules of real estate can be a very low percentage of their actual cash flow. So they've generally funded, like I said, they had no debt even up until a few years ago. So they've historically funded their growth through just cash flow, which is really impressive considering how big the company's gotten.
Once again, thank you so much for joining me. Be sure to click subscribe if you don't subscribe to my channel already. And as always, this video is sponsored by The Motley Fool. Be sure to visit www.fool.com/Frankel to receive the top 10 best stocks to buy now.